Well, the program is Business Incorporated, and the mission here is to do business for 55 minutes. That's what we always do on this episode of the program. Here's what we have prepared for you. Unfortunately, petrol queues are back in Nigeria. What can the modular refineries do? We'll find out. And Nigeria's very first domestic bond in dollar begins trade today. Find out how you can participate. And then in Egypt, it's not go good as Egypt's loan spikes. It's time to do business. I'm Iheanacho. We begin from the global space. Oil prices eased in earlier Asian trade on Monday as fears of weaker demand in top oil importer China weighed on market sentiment, while investors are also focusing on the progress of ceasefire talks in the Middle East, which could reduce supply risks. Now, let's look at the numbers. It's red for this afternoon, 0.2% for Brent at $79.55 a barrel. WTI, that's from the United States, $76.52 a barrel, also down 0.2%. Now, over the weekend, Secretary of State in the United States, Anthony Blinken, arrived in Tel Aviv on another Middle East tour to push for a ceasefire in Gaza. But Hamas has raised doubts about the mission by accusing Israel of undermining his efforts. And the mediating countries, Qatar and the United States, as well as Egypt, have so far failed to narrow enough differences to reach an agreement in months of on and off negotiations, and violence has continued unabated in Gaza, unfortunately. Now, still in the global space, now metals, gold prices eased on Monday and hovered around key 2,500 level as traders locked in profits following billions climb to an all-time high peak in the previous session. And that's on expectations of that interest rate cut, which we're counting down to in September. Look at the numbers right there. Spot gold is down 0.2%, $2,502.78. US gold futures is on the flip side, 0.2%, $2,541.80. That's for US spot gold. Now let's look at other factors there. Last week, that strong retail numbers and lower than expected unemployment claims in the United States, they moved the metals in one way or the other, and traders are confident, getting more confident, I should say, on that rate cut. They're now pricing about 75.5%. Now look at other metals. Spot silver, it's in the green this afternoon, 0.2%. A lot of the metals and even oil seems to be around 0.2%, yes? So to $29.08 per ounce. Platinum is up 0.4%, $957.75, while palladium is the only one on the red side, $947.13 after it dropped 0.4%. Now let's come to Nigeria. Now, the volatile exchange rate used by customs for clearing cargo at ports is worsening Nigeria's inflation crisis, driving up production costs and threatening jobs and eroding investors' confidence. In the light of this, the Chief Executive Officer of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf, is reiterating its appeal to the presidency to set the customs duty exchange rate at 1,000 naira per dollar for 6 months through an executive order. This move, he believes, would support the federal government's effort to ease the economic burden on Nigerians. To also ensure stability, the CPP suggests that the determination of customs duty exchange rate should be transferred from the central bank to the federal ministries of finance and trade through the amendment of the Customs Act to align exchange rates with the government's trade policies. Now, we know that this is also part of a proposal by the Taiwo Oyedele Committee, and we have heard the FIRS boss telling us by September we expect to see a new phase to revenue administration in the country. Perhaps this could be a part of it, and that's why the CPP CEO is bringing this up at this time. Now let's see some results from Transcore. For the very first time, we see interim dividend from that company. That's Transcore PLC. Shareholders have been able to take home a total of 16.339 billion naira. That's for interim dividend paid by Transcore PLC in the first half of this year. Part of this, we see Transcorp PLC had about 4 billion, Transcorp Power 11 billion, while Transcorp Hotel paid about 1 billion, and that's for the first half of the year. Now let's look at other parts of the results. We see revenue, for instance, for the PLC. Well, this is profit before tax. 2024, we saw a 283% growth in the revenue of the PLC of the group to 70.9 billion from 18.5 billion. We also have revenue up more than 100%, revenue 114% up at 175.4 billion naira. That's coming all the way from 82.1 billion in 2023, 114%. And then profit after tax also went up for the group, 157%. To settle at 6.6 billion naira. We also have total assets also grew by 45% to stand at 322.9 billion for the group. Now let's look at power. That's Transcorp Power. Transcorp Power also have some interesting results for the first half of the year. We had a 214% growth for profit before tax at 50.9 billion, all the way from 16.2 billion. Business looking good. And revenue for Transcorp Power also went up 142% to 135.4 billion. Profit before tax is what we have right there. That's revenue up 142%. From 55.9 to 135. Now, there's also Transcorp Hotel. They also have their own results too at the end of the day. Revenue went up 61% for the hotel to 29.7 billion naira from 18.5 billion naira. So that's 61% growth. And then profit before tax was also up almost 200% for Transcorp Hotel, 192%. That's 10.5 billion, all the way from 3.6 billion. An interesting result there from Transcorp. We'll see how the market closes when it comes to investors' action on that stock today. Now, the payment of more services should be denominated in the naira, and this is to increase demand of the naira and boost the value of the currency. This is the perspective of the chairman of Odua Investment Company Limited, Otumba Bimbo Ashiru, citing examples of what's going on in other countries. Mr. Ashiru says the strategy has to be intentional.
In South Africa, for you to take $10,000 out of their system, it will cost you an arm and a leg. We must start doing this in this Nigeria, whereby people talk about, you should start denominating our transactions in naira. I was happy to hear when they said that Aliko Dangote, the refinery, they should be paying naira. Because the rate of exchange, there's pressure. There'll be pressure on dollar when everybody wants settlement to be in dollars. And when you start settling in naira, there will be naira we appreciate, and it's our money. If you take ordinary $1,000 to South Africa and you want to change it, you will think you are signing for something more than that. So you are discouraged to take so much money. So use your credit card. Let's even start an economy whereby we are cashless. There's no need for people carrying cash. It will even reduce robbery. Because when they know that when they come to your house, there is no money to collect, to get, then they will leave you. Look at the number of these domestic staff killing their bosses lately, killing people. It's because they think to have cash. And when they know that they cannot get cash from you, even the kidnappers, I'm surprised that they kidnap, they pay. How do they get the cash?
The other burning issue in Nigeria at this time is the issue of the fuel queues, which are back, especially in Lagos and Abuja. Well, I'm sure you've seen it around here. Of course, With the queues come the increase in the price and increase in black market dealers. Can we find a solution to this? Well, we tried to get perhaps a solution in the morning with Calvin Emmanuel, and he did also bring up the angle of modular refineries. Let's listen to him, and then we'll hear from the modular refinery owners.
What are the issues? Number one, you have a situation, for example, where you see in the last 12 months importation of blended petrol from Malta spiked about $2 billion US. And now you have revelations of documents that shows that for 25% of the petrol consumed in Nigeria, there is a link with importation of off-spec adulterated petrol from Russian refineries that is sent and transshipped through blending plants in Malta. Diesel is sent and transshipped through blending plants in Lomé in Togo. And what you typically have for off-spec petrol is that it's adulterated, and you need to cure it with other chemicals. And this was the reason why, a few months ago when a test was done on samples of diesel that was collected at petrol stations randomly in Nigeria, it showed that one of the petrol stations, that is also linked to importing and transshipping of spec petrol from Russia through Malta, actually had the sulfur level at 2,631 ppm. Daily basis has demurraged for not paying the T60 transaction when it's supposed to be paid. So what you simply see in reality on ground in Nigeria is a situation where if NNPC does not make good on this payment, for the 75% that is controlled by the other international traders for supply to Nigeria, Nigeria is going to be out of petrol, and you're going to see the fuel queues continue around Nigeria.
Well, that's what we don't want to hear, that the fuel queues will continue around Nigeria. But let's hear what the modular refineries can do about this. And we have here in the studio Captain Emmanuel Iheanacho, is the chairman Board of Trustees of Crude Oil Refiners Owners Association of Nigeria. That's correct. He is also the Chief Executive Officer of Eco Refineries and Integrated Oil and Gas Limited. Captain, good afternoon, and thank you for coming here.
Thank you very much. It's a pleasure being here.
Great. So the queues are back. I'm sure you saw it on your way here. And we're trying to find a solution, and we're asking what the modular refiners can do, to help in this situation.
Yeah, thank you very much. The problem that we see manifesting in the queues in town is just a disconnect between supply and demand. So if supply is not adequate to assuage a demand, then of course you see shortages and people continue to struggle and fight to get a fuel. So I think that is the main problem that we have. Modular refineries really would go a long way towards assuaging this problem in the long run. First of all, let me say what they are. We have been producing crude oil for a very long time, but we are stuck in a situation where most of the production that we have is actually shipped abroad. We sell it. And if we sell it, then whoever buys it takes it to a refinery and refines it and brings it back to us and sells it to us for about approximately twice the amount that they paid for the crude. So to start with, we really need to be able to restructure our oil industry and how we manage the sale of crude. So do we really want to be selling the crude if we can actually produce the refined products here locally? Producing the refined products here locally would ensure that we have adequate supply, and the problems that we are witnessing today we don't see. There are other multiplier benefits that we will gain from investing in modular refineries. Jobs, engineering jobs, processor jobs, all kinds of multiplier benefits are there to be realized through investment in modular refineries.
So I think, and it's not a new topic, unfortunately, the issue of exporting our crude and then importing the refined products.
Yeah.
Now we have modular refineries. Now we have Dangote already is importing WTI from the United States into a country that has a finer finer type of crude. I
Sure.
think Brent is easier to refine compared to WTI.
Sure.
And now we're expecting Port Harcourt refinery, hopefully, would also start. So we've had a lot of conversations about having crude, available to domestic refineries. We had Dangote has recently raised an alarm,
Yeah.
saying that IOCs are making it difficult and all of that. And then we had NUPRC responding to that
Yes.
with guidelines, which is supposed to make the environment fair for local. Let me even ask you, starting from there, has that guideline kicked in? I think it's about a month now since that announcement was made.
Well, you know that the PIA is really a new act, and people are actually feeling their way through what is reproduced there. The NMPDRA are doing the best that they can to guide everyone. I really have a lot of dealings with them, and they are trying their best to guide people so that at the end of the day, we become a much more efficient country in terms of how we deal with our crude resources. But the problem is that the numbers really weigh very heavily in favor of us actually taking out investments and making definite policy provisions for having more and more refineries. So that is one of the things that we have to do. We cannot willy-nilly get the oil, we split it according to the formula which is defined in the agreement that we have with the IOCs, and then we sell our share again back to the IOCs. It doesn't make sense. Let me give you an example of the numbers that are there. A barrel of crude oil today sells for about $80 per barrel. But if you actually break it into the refined components, for instance, in PMS, diesel, ATK, and some other residues, you are able to sell that for about $170. So you can see the big difference there. So that is where we should be going. We should be able to refine those products ourselves. We shouldn't be a country that has been exploiting oil only to deliver the oil to third parties, to say to them, well, you can take it, transport it to the refinery, refine it, put it back on a ship and bring it back, and then sell it to us for twice the amount. It doesn't really make sense. Our country really requires access to all the monies that it can have. And to be honest, if we were to develop a proper policy towards a better management of our crude resources, all of the other problems that we have, money for development, money for consumption, money to pay the debts that we owe, all of those issues would be absolutely taken care of. So that is one of the things that we have to do.
So the question is now, how do we stop this crude? Because we've heard of all their obligations, which Nigeria owes, and we have to send those crude. There was even a release from Dangote that informed us that NUPRC has said, well, they cannot do more than they have done. I think they've given 15 cargoes to Dangote and all of that. So where do we start from at this point? It seems really tight.
Well, I think that the issue here is there is a definite provision, because one of the documents that you require when you're articulating your plan for establishing a refinery, one of the documents that you are required to produce is a letter from the authorities saying that they would give you so much crude once you are able to establish. In the first instance, it used to be about 60%, but I think that they are not staying with the 60% currently. They think that you need a little bit more than that, then they are likely to listen to an application that you will put before them. So saying it and doing it are not exactly the same thing, because I have colleagues who own modular refineries and they have finished their constructing and they really want to go, and the capacity of those modular refineries is not even much. And so you would think that it would be very easy for them to find it. But the problem that they encounter, the real problem that you encounter is you go to private sector Nigerians who are in the upstream business and they are extracting oil. and you say to them, I want to buy oil from you, and the first thing they say to you is that this oil has been pledged to the people who financed us. And so you go around and that's all you listen to. They have all pledged the oil to the people who financed them. So you then are tempted to say, who are the people who financed you, so that we can make an application to them and ask them to give us some of this oil. That's where we are currently, you see. And my advice to any of our colleagues who are involved in this is not to fight shy of it. Don't go fighting with anybody. You have a list of those who are producing crude. The law says that a provision has to be made for Nigerians who own modular refineries to be giving crude. Write a letter, document it, and then discuss it. And I'm sure that in due course, people will realize that things have changed and it's no longer business as usual, where people would say, export the crude, and that's it. And then the next time you see it, it comes back as a finished product and you are paying twice the amount that they paid for buying the crude from you.
So I'm tempted to ask, so after you have written, is there any other thing you can do? Is there any provision in the clause? I mean, you guys had one with the clause where they say if they don't meet that domestic demand that was promised, that you can take this action or take this action.
I don't think we've come to the point where anybody has actually considered taking the authorities to court or taking them anywhere. We're still talking. The PIA is new. It's new in concept, it's new in implementation. And of course, we will continue to work with the authorities as we go along to ensure that what was intended in the provision that could be given to Nigerian refiners is attained.
So, I mean, with all of this, it seems like they talk about crude for naira. I mean, that's just on the one side, because the crude is not even available as it is.
Well, that's a big problem. It's really difficult. I mean, in my situation, I'm not a petroleum engineer, but I looked at it from the point of view of economics. When I looked at what normally happens when oil is extracted from Nigerian wells, so it's placed on board a ship, and then the ship then sails to a refinery, say in Europe, and then it's refined, and then it's brought back again on the ship. And I just thought, if I could find a formula to cut off the cost of transport, taking it from here to Europe, and cut off the cost of transport and bringing it from Europe here, it doesn't matter how the price of oil goes up or it goes down, goes up or it goes down, I will be underneath that threshold. And that is what really inspired me to come into this business. And I tried to make sure that I pass that message, that vision on to people that I deal with in the industry, to say, well, I'm not a refining engineer, but the economics of it dictates that we should be involved in this thing. What we really should be aiming for is to become a net exporter of refined products. There's absolutely no reason why 50 years down the line, we're still a net exporter of crude oil. There's no. Contemporary economics has it that you have to try and add as much value as you can in goods that you are producing before you export it, if you have to export it at all. But in our situation, we actually need the product ourselves. So it doesn't really make sense that we are exporting the crude and then we need to buy the refined products, and you are now the one that's selling it back to us.
So as parting words now, Captain, in the morning our guest said we need to restructure the oil and gas sector. You've also said the same thing.
Absolutely.
What would restructure look like? What would a restructured oil and gas sector look like in Nigeria?
Yeah, well, I have talked about, and I hope that people have taken note of the fact that whatever restructure that we're talking about, if we want to restructure the economy in Nigeria, the oil sector is so central that we have to start with it. And the restructuring that we are talking about here is the issue of other people refining for us. We should say, at the end of the day, we want to be able to refine a product. If you want to ask me a question and say, where are we going to get the money from to build these refineries? And I will just give you a very rough numbers. So today we produce 1,600,000 barrels. We produce it at 365 days, and we pay $80. If you really just do the arithmetic there, you will see $47 billion. $47 billion, that's what you're going to see. Try and benchmark that against what happens. We have a budget that has been set. The budget is how much? 17.9, call it $18 billion. The difference between 47 billion and 18 billion is a lot of money. And if you wanted to invest that a windfall in building additional refineries, you would be able to build at least 5 refineries about the same size as the refinery that's in Port Harcourt. So the only thing that is missing is for somebody to sit down and articulate this thing to say, look at it, the money is there. Don't go borrowing money from anywhere. Let's continue to sell oil at the rate at which we are selling it. And the other thing that we need to do is try and raise the threshold in terms of the volumes that we're doing, because we are doing 1.6 today. OPEC says that we can do 2.4. We are absolutely going to raise the threshold in terms of the volumes. And if we did that, how much do you think we would see? We would see $70 billion. It's a lot of money. So, but somebody has to articulate it and form it into a proposal that government can actually say to the bank.
Steps
Absolutely.
Also. Well, I guess oil theft is also an enemy to that. Captain Iheanacho, thank you so much. Captain Emmanuel Iheanacho, Chairman, Board of Trustees, Crude Oil Refiners Association of Nigeria, Koran, is also the Chief Executive Officer of ECO Refineries and Integrated Oil and Gas. Thank you for your time.
Thank you very much. It's nice being here.
Same here.
Thank you.
All right, let's take a break now. When we come back, we'll head to the markets. We're still looking for solutions to get the queues off the filling station. Welcome back. It's still Business Incorporated on Channels Television. We head to the markets now with Will Ebong. But first, I'd like to ask Will if you saw the field queue. No, I know a couple of people who spent the weekend at petrol stations,
yes, so
in an attempt to get liters of petrol, which they're going to pay extra for, so that they can get to work today.
It is quite heartbreaking to know that you're in your country, and you can't even feel at ease knowing that there's no supply of, petrol for your car, your homes, your businesses, because you look at it and say, how do I manage time? How will I manage productivity if I spend all my time at the filling station? How would I reduce the cost of production if I'm buying fuel or energy?
I think the heartbreaking part of it is, when they say someone has soap in his eyes in an ocean. I mean, this is a country that is rich in crude.
True.
We just spoke to, one of the owners of modular refineries in the country. We've heard Dangote, asking, give me crude. I mean, Dangote is in Nigeria. I think we're the biggest. We beat Angola in oil production, and yet Dangote has to import WTI from the United States. These are just the facts that break a Nigerian's heart.
And when you think about it, it is not today. It's one of the issues now. I was talking to one of the guests. It's like, we need continuity we need a blueprint. Like he's mentioned, we need to get it right. How do we ensure that we get our supply, we produce oil, and we sustain that production? What are the things we need to put in place to ensure that maybe there's no crude oil theft? You said it's an enemy to oil production in the country, but we need to ensure that this is resolved. What do we need to peg it? What do we need to put a stop to what the crude theft in the country? We need to resolve these issues and ensure that they are sustained. Because if we continue like this, I don't know how much more they can take. We don't want...
How much more can you take, Will?
Anyway. I have to hold on.
Okay, all right.
I have to hold it.
I'm holding too.
Yes, hold it. And I just have to say that I'm so sorry about last week. You had to report the market. It was red and red and red. I saw that you were changing your clothes. It was just red clothing. Red clothing. I was like,
it's because you were not here. Now that you're here,
the market should be green. Oh, fantastic. But I did start off with the red, just hoping that I'm just gonna be in the middle somewhere. But let's just kick off and see how major stocks in Africa performed at intraday. Sentiments were mostly positive. Nigeria's NGX was trading up by 0.37%. Luckily, contrary to what we saw last week, a bloody week. Expectations for last week was like it was going to close positive, because we did see that jump in O and O, but we did also see profit taking towards the end of the week, and Boa Cement also dragged the index down. South Africa's JSE was also trading up at intraday nearly 1%, and also we see Egypt trading down, however, not in positive territory, nearly 0.5% down. And Kenya, casting a look back into last week's trading activity, Kenya closed Friday's session in the green, 0.45%. Now, before we check in on other markets outside Africa, let's have a quick look at what's happening in Nigeria's debt market. Today, the federal government is issuing the first series of its domestic dollar bonds to raise at least $500 million from local and foreign investors. Now, the program is the first of its kind in the country, with the minimum subscription of $10,000. But as always, many would like to know how this will impact Nigeria's economy, and this is all happening today. For this, we are joined by Professor Uche Waleke. He's a professor of capital markets and director, Institute of Capital Market Studies at the Nasarawa State University. He joins us from our Abuja studio. Good afternoon, Prof. It's good to have you on the program.
Yeah, thanks so much, Wills. And good afternoon, Amy.
If you can hear me, the auction is taking place today. What are the expectations for the bond with regards to Nigeria's current economic situation?
Well, overall, I think it's going to be positive on the part of the government that is looking for funds to plug fiscal deficit. It will be a cheaper source of raising funds. The alternative would have been to, of course, issue naira bonds that are beginning to be expensive, especially against the backdrop of a high interest rate environment. Another alternative would have been to issue euro bonds, again, which would of course also mean higher cost. So for the government, it's a cheaper source of alternative source of funding the deficit. And for retail investors, institutional investors, that's a very good way to diversify their portfolio. And I think it's also something that will help deepen the capital markets, particularly so because this is the first time, and we expect that it's going to be a door opener, to open doors for the private sector to also, come in to issue dollar bonds in our domestic market. And I also think it will also free up, if you like, funds for the private sector, because the more the government comes to borrow, do naira bonds, of course, you should expect that private sector will be crowded out, particularly now that banks are recapitalizing, banks are looking for funds. So it's important for the government to pull back and allow, the private sector, to have a feel of the market.
Talking about pulling funds and looking for money, since local investors, you say it's a good thing that we can now have local investors participate in the dollar bonds, but where will they source these dollars from? I'm sure a lot of people are wondering, how will the quest, and if they have to source for the bonds, the dollars, how will the quest for dollars, would it not put more pressure on the naira?
Well, that's one of the concerns that has been expressed, including by the International Monetary Fund. The dollar domestic bond is targeting not only diasporans, Nigerians in diaspora, but also targeting local investors, those people with money in dorm accounts. So where will the funds come? Of course, it's those with funds in their dorm accounts, and also the diaspora, the non-resident Nigerians in diaspora. The diaspora remittances to Nigeria, according to the World Bank, in 2023 was as high as $19.5 billion. But only 10% of that, we hear, came in through the formal channel. So this is one good opportunity for diasporans to invest in the Nigeria, the government's, the bond. But again, yes, the concerns are genuine. Especially when the funds are mobilized substantially from onshore, from domestic investors. But I also hear that one of the things the DMO is doing in that direction is to ensure that people don't even go to the parallel market to buy this dollar, to invest. Okay, so the DMO is saying cash will not be allowed for purposes of investing in these bonds. You don't go and bring, cash, that's, dollar cash from the parallel market. And even if you're getting it from your dorm accounts, it must be money that has been there at least 30 days before the opening of the offer. Okay, so what it also means is that you don't expect people to go to the black market, buy dollars, put in their dorm accounts to be able to launder. No. Okay, so I think they have put in place a number of measures to ensure that, that doesn't happen. So essentially, the funds are expected to come from not only those in diaspora, but also retail investors, high net worth individuals, here in Nigeria.
Thank you so much, Professor Uche Uwaleke, for your perspective there. Professor Uche Uwaleke is the Professor of Capital Market and the Director, Institute of Capital Market Studies at Nasarawa State University. Thank you for joining us on Business Incorporated.
My pleasure, Wells. Thank you.
So let's move on to other markets now. Major equities in the Gulf were mostly positive at intraday. We see Abu Dhabi trading up 0.18%. But on the flip side, we see Dubai down at intraday 0.17%. Slightly similar margin. Now, still within the region, Saudi is up 0.16%, and Qatari index is also up 0.2%. Now, a wave of IPOs taking place in the Middle East markets. The MENA region saw 14 IPOs valued at $2.64 billion in the second quarter, with Saudi Arabia leading the markets with 11 offerings, followed by the UAE and Kuwait. And the IPO outlook for the MENA region looks robust for the remainder of this year, with Saudi Arabia set to have the largest share of of IPOs by deal volume. And let's look at the US and see how stock futures performed in early trade today. It was little changed after the S&P 500 registered its best week of 2024. Now, the futures tied to the S&P 500, Dow Jones Industrial Average, and the NASDAQ were all around the flat line in early trade today, following the busy week of economic data and ahead of the key speech from Federal Chair Jerome Powell. And we also see Advanced Micro Devices Incorporated, AMD, is also making another artificial intelligence acquisition, and this time with the purchase of AI infrastructure company ZT Systems in a deal valued at $4.9 billion, stepping up its race against NVIDIA. We're going to be keeping an eye on that. Now, all eyes will also be on the commentary from the U.S. Federal Chair, as I mentioned earlier. He's scheduled to speak at the Jackson Hole event later this week. Investors remain optimistic over a potential U.S. rate cuts as data showed slowing inflation. Also, Goldman Sachs has shifted stance again. It has cut the probability of the U.S. going into a recession at the end of this year to 20% from 25% after we saw that retail and jobs data on Friday. Now, let's check out the Asian markets now, which are mixed. They closed mixed on Monday after a week that saw a broad rally in stocks as, investors are waiting, a slew of releases, inflation data, economic data is going to be rolling out. The Bank of Korea will release its rate decision on Thursday, while inflation data from Japan and Singapore released on Friday. Now, China will announce its 1- and 5-year loan prime rate on Tuesday. South Korea's Kospi slipped 0.85%. Nikkei was also down 1.77%, losing that 38,000 again on Friday. And also we see news coming in from Japan showing that both Japan and Tokyo governments are seeking a 700 billion yen, that's a $4.7 billion valuation for subway operator Tokyo Metro. And the reports say that the country plans to list the subway operator at the end of October. Half of the company's shares are planned to be sold in its initial public offering, which means that 350 billion yen would be Japan's biggest IPO since 2018. On the other hand, Hong Kong's Hang Seng Index, we see it rose 0.49% to close Monday's trading session, and Australia's index also up 0.12%. So it's a mixed bag for the region, and also we're going to be seeing that slew of economic data, inflation numbers are expected. A lot is going to be coming out of that region, and especially for Middle East as well, a lot of IPOs. So that's what we have for the markets. We're going to be looking and keeping an eye out for Middle East, and we're going to be keeping an eye on Asia and the US. We'll see what Jerome Powell is going to say on Thursday. Yes,
obviously, and I know that's going to move even the Asian markets at the end of the day. But thank you so much, Will, for that update. Right. Let's head to the UK now, where energy bills is in the news again, and they're saying it could rise to an average of more than £1,700 a year by October. Let's have Juliana join us now to tell us what more about this. Juliana, this doesn't look like good news at all.
No, it's not great news. Good afternoon, Innie. That £1,700, which consultancy firm Cornwall Insight are projecting, is on average of about 3.5 million naira a year. And that's just to put on the lights and heat your stove. It is incredibly expensive to live in London, and that is the issue at hand here. It's the cost of living, and we know over the past couple of years energy prices have really been at the lead of why the cost of living in the UK is so high. Right at the moment, we are in the quarter where energy prices are about £1,500. So it's still much lower than some of the highs we saw during Liz Truss, the former Prime Minister's tenure. I think at that time, energy bills were projected to rise to about £3,000 a year, totally unaffordable for any normal average earner, a Brit. But what was put in place during her tenure was the energy price guarantee cap, but that's since expired. So now we're relying on what the wholesale prices are and how they're going to be trickled down. It is still summer, so most people are not putting on their heating, and a lot of people are eating food that's much lighter. So we're not spending as much on gas. But of course, that is set to change. And looking at the projections that Cornwall Insights have looked at to put this forecast together, they are saying they believe that British households are going to, of course, be using more. And so the cap is going to rise. This is likely going to be another significant headache for Sir Keir Starmer. He did get a historic victory a couple of weeks ago, but of course, all of the political pundits did say it's going to be the shortest honeymoon period in history. Not just the riots, but of course, it is going to be about the cost of living and energy prices. We do not have a full statement from the Palace of Westminster now because, of course, they're on recess. They're not due to sit back for a couple of weeks. But certainly this is going to be a huge issue. How are we going to be energy secure when the war, just a stone's throw away from where we are in Europe between Russia and Ukraine is going nowhere fast. So, yeah, not great news to start the week.
Yeah, not great news at all, unfortunately. But I hope the market can brighten the mood a bit.
No bright spark there, unless, of course, you're a hoarder of gold. I think gold has been rallying significantly over the past couple of days, currently up to about $2,500. There's also another story, which perhaps we'll discuss tomorrow or later in the week, about Britain's embattled water firms who they're riddled in debt. And apparently there are significant fines totaling about £2 billion. That's trickled down to the markets, and that's affecting sentiment at intraday. So the all share is down by 0.07%. The FTSE 100, the blue chip, that's down by 0.16%. And the FTSE 250, the domestic market, slightly up by 0.09%. In the currencies market, the British pound is trading up against the US dollar by 0.14%, up against the euro 2 by 0.04%, but down against the Japanese yen at intraday by 0.84% in A.
All right, Juliana, thank you so much. We'll get comforted and ready to tomorrow. All right, now let's head to Europe and see what's happening there over in Europe. Well, of course, talking about, Juliana just talked about the war going on in Ukraine. Of course, we hear Ukraine taking the war to the doorsteps of Russia, but it's costing. And now Germany is talking about the war budget and what the assistance they're giving to Ukraine at this time. Well, we have Wada Imran joins us now from Berlin to give us details of this plan. Hi, Wada. Good afternoon.
Thanks for having me, Eni. The German government is going to limit military funds to Ukraine. And this is according to reports and data seen by DPA, the Deutsche Presseagentur, and a local newspaper in Frankfurt. What this means is that Germany is looking to open more avenues of arranging funds for Ukraine that don't necessarily come out of the federal budget. Now, this budget has been the source of fierce debate between members of the ruling coalition. There is a lot of discussion and concern about rising debt, managing costs and spending of the German government. I think the government here just maybe doesn't have enough money to make big promises at the moment. It's important to note that this budget, the one for next year, 2025, could still be revised before it's adopted by the end of this year. But these decisions have created divides between German lawmakers and political parties. A politician from CDU, that was the party Angela Merkel was associated with, said that this decision means leaving Ukraine in the lurch. Even members of the Green Party said the government needs to take more responsibility. And there are also lawmakers saying that the funds to Ukraine should be entirely cut.
So I wonder how this is going to affect, of course, other facets and reactions from Ukraine too.
Well, this is something Germany is careful about before announcing any cuts in aid. A spokesperson for the Federal Press Office told DPA and referred to the decision of the G7 countries earlier this year, which said that $50 billion for support for Ukraine will be provided by the end of this year, and of giving the interest earned on the frozen Russian assets to Ukraine as well. So it seems that Kiev's funding will now be more international. The possibility of short-term provisions and emergency provision of funds is always a possibility. That's what we've seen and known from actions of the finance ministry here in Germany. Even for this year, for example, 2024, 4 billion euros were initially planned in military support. But the German parliament increased it to 7.5 billion euros. So there's always a chance that the same can happen next year. But there are also whispers and rumors that because the German economy is not in top shape, and until economic growth comes along, it's hard to say about the future of this aid.
Yeah, the rumors right there. But let's look at the markets and see what investors are doing, Wada.
Well, European shares were flat this morning. They had a great week last week, but the next few days may be under the shadow of a data-heavy week. The most striking thing on investors' agenda this week is a speech on Friday by Federal Reserve Chair Jerome Powell about potential upcoming interest rate cuts. This speech is highly anticipated, although many think that Powell may remain tight-lipped ahead of the next USA jobs data expected at the start of next month. Investors are also keen to see PMI data from big economies, France, Germany, the UK, and Eurozone. A positive note is that it seems investors have gotten over the chaos of the sell-off earlier this month. The three main indexes on Wall Street rose last week and came back to their original highs before August. And there is confidence that the US economy is out of trouble.
Yeah, we hear those numbers, Wada. Thank you so much. Let's come to Africa now. And Egypt's banking sector saw a notable increase in loan balances to 6.831 trillion Egyptian pounds, and that was for April 2024, an increase from 5.286 trillion pounds in December 2023, and this according to the Central Bank of Egypt. The report shows that government loans reached 3.439 trillion pounds by the end of April, up from 2.356 trillion pounds in December. Of this amount, 1.617 trillion pounds was in local currency and 1.822 trillion pounds in a foreign currency. Non-government loan balances total 3.39 trillion pounds by April, compared to 2.929 trillion in December 2023. It's time to head to the crypto space now and see what's going on there. And right, turning to the board, I see it's a red board this afternoon, continuing from where we stopped, I guess, on Friday. The weekend did not do a lot of good. I wish perhaps Kamala Harris or Trump did say something, but I think they did not. So we see red, BTC 58,242.68. That's down 3.34%. Ethereum is also still in the red, a whole lot of red there. But I mean, of interest to us this afternoon is that statement or, suggestion from FIRS boss who was in Lagos on Saturday about regulation of crypto transactions in Nigeria. And this, the crypto community has been asking for, actually, so that they are legalized and then they know they are part of the system. But we wonder what face it will look. And then, of course, there's also the crypto miners crying out about electricity tax from IMF. This, of course, they say that the plan, which is intended to limit carbon dioxide emissions, has garnered much opposition from business executives, and critics point out that the IMF's report fails to consider the progress that has been made by cryptocurrency industry in adopting sustainable energy sources. It does seem like, the crypto market is getting hit and so on all sides. But Rume Ofi joins us now. Rume, good afternoon. Let's talk about this, anticipated regulation. I wonder what you think it will look like.
It's going to be something, keeping our fingers crossed, hopefully something comes out. But one would have expected that all of these finance committee from the Senate and the House of Reps should somewhat include industry players at some point. But let's see how it goes. Let's see how something good could come out, because the truth is we've been clamoring for a couple of things. This is an industry that has about 33% of our population here in Nigeria holding one form of cryptocurrency or the other. And it's been said that we have about our crypto industry here in Nigeria is one of the biggest in the world and tops in Africa, amounting to about $400 million in transactions. So is going to be good. We have engagement with the authorities, which is the parliament, to be able to discuss way forward, because people playing in this industry tend to understand the industry better than those in government. So be able to give ideas on how it will go about to see how it favors our country. Because in recent time, crypto has been seen as the black sheep, and it's not good to throw away the baby with the bathwater. There are a lot of opportunities here, and in the Western world, it's been harnessed effectively.
Rume, just in a sentence or so, because we're out of time. If they were to start that regulation, what area or consideration do you think should be prioritized?
Right. I think in the where it should prioritize the aspect of either cryptocurrency is a currency to transaction or is a store of value. I think that should make a whole lot of things clear, so that we don't see cryptocurrency as challenging the naira with all of those movement here and there. It's been seen that way. A lot of people think cryptocurrencies are the reason why the naira is fluctuating or the naira going down.
All right, Rume, thank you so much. I appreciate that for being part of the show. Also, Rume Ofi, financial market analyst.
Thank you, Ini.
So that's it on the program. We'll have another opportunity tomorrow. So join me again, 10 a.m. and then 1 p.m. I wonder what we have in store for you tomorrow. But first, I really do wish and pray that the petrol queues will be out by the time I'm coming out tomorrow. I know you're praying with me also. But let's do this again tomorrow. I'm Mini John. Enjoy the rest of your day. Bye-bye.